When the market is overbought or oversold, it does lend to very poor buying and selling decisions. When you have an overbought market such as these, and you have an oversold market such as this, taking a buy or sell trade to continue with the trend in these conditions is not a good idea. So the question is there a way to identify overbought and oversold conditions? Is there a tool or an indicator that I can use to properly do that? Let's take a look at this from the beginning. We're going to take a look at what would constitute an overbought or an oversold condition. Now, when we are overbought and oversold, we do not want to continue trend trading. In these areas, we're finding that the markets are exhausted. So we've got a price that's moving up and we become overbought. So continuing to buy into this is a really bad idea. We need to see the market relax a little bit before it continues to move up. And we see that again here. The market moves up, and buying in these overbought conditions, again, it's a bad idea. And if the market is on the way down, let's move the chart over one way or another. If the market is on the way down, we're seeing bad sell conditions. So we've got an oversold market in here. We've got an oversold market in here, and we've got an oversold market in here. Now, this is an unusual section of the market where it continues to drop. This isn't normal. When you get a market that is really overextended, the fact that it continues can happen, but it's not a normal thing. Now, what I'm using to determine what's overbought or oversold is these moving averages. Now, I am going to show you an indicator that you can use that will help you determine overbought and oversold. And I don't think it's going to be the indicator that you think it is. Let's start with these moving averages though. We've got a 13 and a 50. So with these moving averages, we've got a pair. We got an idea for a trend. Now, by pairing these up, the trend is really what we're using it for. The overbought and the oversold conditions are going to be specifically correlated to this 13 EMA. What we're taking a look at is the price and its proximity or its distance from that 13 moving average. Now, when we're looking at the market moving down, we can see that the price starts at the moving averages. Here we get an area where the price is at the moving average. Price is at the moving average, at the moving average. We can see that these are launching points. These are what we would consider sweet spots. They are good places for the market to jump. We could get into a trade from here. The opposite to that is when the price moves away from that 13 EMA. So we get a price that drops down after that move away, and it creates a space between the price and that 13 EMA. When we start getting that space, we start to become more and more overextended. We see that here to the upside. The market moves up and it creates that space between the 13 and the price. Again, we're becoming overextended. In this case, we're overbought. When we get an overbought or an oversold market, the general solution to that is having the market pull back into those moving averages. We get an overbought market, the market pulls back into that 13 EMA. We get an oversold market, the price pulls back into that 13 EMA. Again, we see that here. Again, we see that here. That is the general correction to an overbought or an oversold market. So because of this pullback that we're looking for, that makes these areas very dangerous to be buying or selling if you're continuing with the trend. And this is going to work on any time frame. This is going to work on any currency pair. It's going to work on whatever it is that you're trading. So what is this? This is the 4-hour time frame. If we take a look at the 15-minute time frame, we're going to see the same sort of thing. We have the price moving away from those moving averages, and then it has to pull back. It moves away and then pulls back, moves away and then pulls back. On the short side, it moves down and then pulls back up. Now here we get a little bit of an overextended section. It maintains its overextension for a little bit longer than normal, but at the same time, it still pulls away and then comes back into that 13 EMA. Market moves away and then comes back into that 13 EMA. So when we're looking at this one in particular, I would stop buying into this in this area in here. I would not be looking to get into any kind of long trade to capitalize on this extra movement. We've already made the move away from the moving averages, and now I'm looking for the pullback into those EMAs. When we have the market moved away, continuation can happen. We can see that the market would continue, but it's not a normal thing. It is not likely to continue. Now, if we're going to take a look at an indicator that could give us fairly reliable overbought and oversold, I'm going to be taking a look at not the RSI. I think most people want to look at the RSI when they look at overbought and oversold conditions. Instead, I'm going to be looking at the stochastic oscillator for this. I am not a huge fan of the stochastic oscillator. I don't use it for what most people use it for. If I'm going to use the stochastic oscillator, I'm going to reduce the components a little bit, and I'm going to be using it for overbought and oversold oversold conditions. So let's get into this stochastic. I'm going to change the settings to what would be considered the defaults. So we've got 14 period, and I'm going to get rid of the signal line. I do not need that crossover. I'm simply looking at overbought and oversold conditions. So we've got a trend in one direction. The trend is going to be determined by the moving averages. So we've got the 13 above the 50. We are looking at overbought conditions. These would be bad places to be looking to buy. So we have a stochastic getting overbought right in this area here. You can see the price is pulled away from those moving averages. Now we're looking for a pullback into that 13 EMA. We can see a little bit of that here. I wouldn't consider this to be supremely overbought because we haven't really moved too far, but the stochastic is showing us that we do have an overbought condition. Price again pulls away from those moving averages, and that stochastic is showing us that exact same thing. So it's showing us that we are above that 80 level for the overbought conditions. And when it comes to oversold conditions in an uptrend, these don't matter quite as much. I know that some traders like to use this as potential buying. So you've got a market that is trending up, you get the pullback, the stochastic gets oversold. We're looking for that opportunity or that signal to buy. That's not how I use this. It doesn't present enough signals for me to use it this way. But if I am using the stochastic, I am going to use it strictly for this overbought and oversold kind of criteria. If we're looking at this section in here, we've got a market that's moving down, and right in this area, right in here, the stochastic is already showing us that we're oversold. And when we take a look at the price, indeed, we have gapped away from those moving averages. We are oversold, and it stays oversold for this length of time. And I would argue that this is exactly what it is. This market has been oversold for an overextended period of time. We are definitely looking for the market to pull back, to retrace, to find some sort of equilibrium after that. And again, in this area right here, we are oversold. And the stochastic is showing us that we're oversold. Again, we can see right in here, we've gapped away from those moving averages. That stochastic is showing us an oversold market. The trend is down. The stochastic is going to show us if we have moved too far and if we need a market to make that pullback. Now, the thing with oversold and overbought markets, they do not mean that the market is going to reverse. When you have an overextended market, that all by itself does not mean that we're going to get a reversal. You're not going to see that the price gets up, becomes overbought up in here, and then it's just going to drop down. That does not have to happen. We may get a market that comes up and then just goes sideways a little bit until the indicator or the moving averages catch up. Once we have that moving average and the price catch up, we consider ourselves at a kind of an equilibrium where everything is settled again. And then from here, we can see the market continue to move. This overbought section of the market does not guarantee, or it does not even suggest that we're going to get a big move in the opposite direction. People that are trading the RSI with overbought and oversold conditions generally play it like this, and they find it very difficult to make money because this is a hard thing to predict. The kind of pullback we're looking for isn't generally going to be something that you can easily spot simply because the market is overbought or oversold. But what we can take away from it is when a market is overbought, that buying in an overbought market is just a bad idea. We need the market to either go sideways or make a pullback, and it potentially could correct. But once we get these pullbacks and once we get these sideways markets, once we get the market to reset, then we are good for another buy trade. All right, I hope this video helps. Buying and selling in overextended markets, they don't guarantee a reversal, but at the same time, this is a market that we should be staying away from when we are trading with the trend. When the overbought or oversold condition isn't present, and in this case, we're in the moving averages, so the price versus the moving averages is not overextended. And if we take a look at that on the stochastic, it is also not in the 20 oversold area. So this makes it for a good opportunity to buy or sell, in this case, to sell. Add this to your trading, see what you think. Stay away from sells in an oversold condition and stay away from buys in an overbought condition. Please like the video if you liked it and subscribe for more videos just like this coming to you very soon.